So Trump hasn't officially announced who's going to replace big mouth Jerome Powell, but there's some leaks, there's some jokes. At this point in time, I'm just going to come out and say my prediction is Kevin Hassett. So who is Kevin Hassett? Here's a picture of him right here. You might have seen him in interviews, on the news, things like that. But let's learn a little about him. Why is Trump going to pick him? What do we think he'll bring to the table? And what we really care about, will he lower those rates quick, fast, slow? Is he going to stay independent? What do we think? I'll give you my honest opinion. But before I do that, and we jump into Kevin, if you and I have never met, my name is Kenny Simpson. Thanks for watching. Welcome. I focus on 1 to 4 unit financing. That means I do residential mortgages for 1 to 4 units. Whether it's your primary, secondary home, investment property, I've been doing that 20 years, helped over 5,000 clients, funded $1 billion of loans, and I make videos like this that you're watching right now. Why? Because I want to entertain you, I want to educate you, I want to help you, and hopefully I want to make you understand and break down all the noise, all the mess, all the nonsense, all the BS, all the data out there. And that way, hopefully makes a little bit more sense to you. But anyways, back to the video, back why you're here and why Kevin is most likely going to be the choice. Is he going to be the right choice, the best choice? But first of all, let's dive into who Kevin is, and then we'll go into more about what we think he'll do and if he's going to be a good choice or not. Kevin Hassett is the current director of the White House National Economics, a role that has begun early in 2025 under President Donald Trump. Before he served as a chair of the Council of Economic Advisors from 2017 to 2019. He has a long background in economics, including academic work. He once taught at Columbia Business School and policy work at conservative think tanks. In short, he's a well-connected politically, academically, and very familiar with economics policy. Why is he be considered? Well, look, folks, let's just be honest. If you like Trump, you don't like Trump, you hate Trump, you don't care about Trump. But if you're watching this video, I bet you care about real estate, and I bet you care about lower interest rates because that's what we care about. So if they interviewed 20 people and they end up picking Kevin, why do you think they're going to pick him? Let's just use our brains and our common sense and think, why is Trump going to pick this guy? Number one, he is going to pick somebody that probably has the same mindset, beliefs about what is going on in our economy, our world, affordability, the whole thing. This person probably thinks that Jerome Powell is asleep at the wheel and slow to lower rates. This person also might think like, hey, we need to look at data differently. We need to look at the economics differently. Why are we always looking in the rear view mirror at data when we have AI and technology that can bring it to us right now today? So this person that Trump is going to pick, if it's Kevin, who I believe it is, it's because they're aligned probably on all these things. Are they going to agree on everything? Probably not. Trump's also going to look for somebody that's going to be loyal, that's probably going to have the best interest of affordability, rates, the economy, things like that. He's not going to be political. Could this person be political? Sure. Who knows? But folks, at the end of the day, Trump, Kevin, even Elizabeth Warren, yes, you can go and check out a clip. Even Elizabeth Warren, check out here in this clip.
So look, I've argued for 2 years now that I want the Fed to cut rates. I thought that inflation was well under control, headed in the right direction, and the Fed could bring down the interest rates.
As you know, who can't stand Trump, doesn't like Trump, hates Trump, guess what she likes? She likes low interest rates because it helps affordability, helps small businesses, and it helps the economy, and she wants to help everybody out. She'd give free money away if she can. So she's for it. So what I'm telling you folks is Trump is going to pick the person that is aligned with him of how he thinks rates should go, how he thinks policy should go, how they look at data, and how this whole thing is going to unravel. So the next question, and the biggest question, the $1 trillion question we're all asking ourselves is, when will he announce this? When will this start making an impact on rates? And when does Powell get out? And when does Kevin come in? And will we see any rates changes? What do we think? So I'm going to give you my best shot at this. Could I be completely wrong? Absolutely. Could I be completely right? Possibly. Could I be somewhere in the middle? Hopefully somewhere in the middle for you. So here's how I think this plays out. Trump, if he can keep it this way, we'll see, says he's going to announce this sometime in the very beginning of 2026. But if Trump can't keep his mouth quiet and he gets all excited and says something he's already slipping, it might slip out. He might come out and say it before the holidays. My guess is he's going to announce it right after the beginning of the year. It's like 2026. Here we go. Let's hit the gas. Let's go, baby. Let's go. So Kevin gets announced. Then what happens? Kevin's already on, guys. You can go look him up. You can watch him on interviews, short form, long form, the whole thing. He is going to do tons and tons and tons of interviews. But yes, he is going to go on interviews. They're going to ask him, what do you think of the data? What do you think of the economy? Do you think you're going to cut rates? How much? Blah, 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 blah. He's going to go on interviews. They're going to have a whole game plan. He's going to come out with some projections. Maybe he will. Maybe he won't. Maybe he's going to keep his mouth shut, lip tight. I don't know. Maybe Trump's going to say it's in and he's going to cut rates and he's going to be great and all this. I don't know. But my prediction is if he does come out and gets interviewed and he talks about how he thinks about the economy, is he going to cut rates? Is he going to be more aggressive? If he indicates anything at all that he's going to cut more, he's going to be more aggressive about lower rates than Powell. He doesn't agree with Powell. He thinks we should look at data differently. He thinks the system's broken. We're outdated. It's 50, 60 years old of how we do this stuff. That's the kind of talk I think we're going to get. Here's one thing I talked to somebody today that is in the real estate business that doesn't realize, and a lot of people don't know this, so pay attention to this part right here. Most people ask me, Kenny, I'm confused. Even people in real estate. And I'm going to explain this to you. This is huge. Pay attention, please. I always say this, and people don't pay attention. It's not what the Fed does. It's what the Fed says that's going to dictate where rates go. Let me repeat it. It's not what the Feds do. It's what they say that will determine where rates will go. Let me give you an example. I'm making this video. It's going to go out in the next day or so, right? We're in December, the beginning. They're supposed to cut rates in December. It's up in the air. If there's a rate cut in December, most likely it is built in the 10-year treasury, all the treasuries. That means that treasury of 4%, 4.1, or the 5, 7 year, whatever you're looking at, whoever you are, it's already baked in the cake. It's already in there, the cut. So when they cut, if the interest rates go up, that's because they already built it in. Then everybody goes, but Kenny, why did they go up? It's because of what Powell is saying. If he says, hey, everybody, I'm going to cut rates 0.25% today. Woo, yeah. And then he goes, but then here's what I think. We're thinking the economy is not as bad. We think inflation's a little higher. We think the job market is not as bad. So I'm not sure if we're going to cut. You just took all the momentum, all the wind out of your sails. Remember, folks, the 10-year treasury, the treasuries, the 10-year, it looks out 6 months and comes backwards. So if he tells the market that I cut, you already got it. If he thinks, hey, I'm probably going to cut 3 times this year, and this is the 3rd time, it's already built in because he said it. But if he's saying moving forward that I don't think things are going to be good, I think the economy is better than we think, I think job market's going to be strong, whatever it is, that is going to affect what rates do. So again, it's not what he's doing at the moment cutting rates, it's what he's saying is. So with that being said, pay attention because this is important. This is number 2 you got to pay attention to. So Kevin Hassett, let's hypothetically say he's going to come out and give an interview and he's going to say, you know what? I like Powell. I don't agree how he looks at data. I think he's behind the curve. We think inflation's not as bad. We think we need some cuts. We need affordability, blah, 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 blah. We're projecting over the next between 26 and 27, we're going to cut interest rates 150 basis points. Folks, if he says that, he's telling us he's not even in the Fed chair yet. He's telling us what's going to happen in the future. What do you think the 10-year treasury does? It doesn't go up. It goes down. And if Powell comes out and says, well, this and that and this, Powell, you're out in a few months. Nobody gives a shit anymore. So what I'm trying to say, folks, if Kevin Hassett comes in, obviously the guy's smart. He agrees with Trump. He has the background. He's the guy for it. He's going to be one of the most powerful people in the world because when he makes decisions, it doesn't just affect the US or everything. It affects the entire world. But the reason why we need to get interest rates down, he's going to be talking about because of affordability, because of the economy, because of jobs, because the consumer, Because of small business, a lot of things. Small businesses right now, which is not talked about enough, because if you're a small business, you know this, you're getting crushed if you have to go borrow money. 8%, 9%, 10%. It's terrible. If you're a massive, massive company like Amazon and you need to raise money, you can go out there and get money, folks, for so cheap, it's unbelievable. They're paying 3%, 4% all day long. I'm just letting you know. Why? Because they're a gazillion dollar company. They can go out there and they're going to go get $100 billion. They can just do it. That's why, okay? It's just they're big, they're massive, and where they're going to go get debt, it's huge, and somebody's going to give it to them for cheap because everybody wants to give Amazon or Chase Bank or Boeing or anybody, whoever it is, right? They just want to give them debt. Obviously not a failing company, but you know what I mean. So to wrap this up, is Kevin Hassett great for the job? I don't really know. We don't know until Fed gets in. One thing I will tell you, which I hope out of this Fed that we get, is they're not political. They're very transparent. Hopefully he talks a lot more, gives a lot more insight. But the biggest thing for me is that he's really going to look, analyze, and hopefully the way we have done things for the last 50, 60 years, whatever it is, and we're now in 2025, almost 2026 with AI and technology. There's things like Trueflation. You can go look Trueflation up where you can get like, it analyzes millions and millions and millions of pieces of data. And like this, it gives us where we at with data today and actual inflation. We should be analyzing real-time data. For example, where's the jobs market? Where's the rental rates? Where's shopping? Where's inflation? Where's all of this stuff? Why are we looking backwards 6 months, a year? It's nonsense. It's got to stop. So we will wait and see who gets picked. This is my guess, but when this person gets picked, if they come out and they're gun blazing about what they're going to do and they're going to tell us where they're going to go, we know ahead. And last but not least, keep in mind, folks, let me remind you, cutting rates is one way to get rates down. Number one, I tell you this over and over, the spread between the 10-year fix and the 30-year fix has come way down about 80 basis points. It still has another 30 to 50 basis points to go. If you get somebody like this in, it gives a market confidence, it gives them that boost. We'll get those spreads down. So the rate you just got quoted today, it could be 30 to 50 basis points lower. Fannie and Freddie are talking about. They're going to probably come out maybe on some primary stuff, maybe on second homes, maybe on investment properties, cash out, get rid of some of those LLPA hits, all those extra hits that they have in there. They can reduce some of that. That could drop interest rates an eighth and a quarter like that. The other thing, the Federal Reserve can come out. They feel like they need to stimulate the economy, bring down rates. They can start buying mortgage-backed securities, treasuries, bring interest rates down like this. Have we lived through that? It's called COVID. Remember when the rates dropped? Because they were buying whatever, $100 billion of treasuries a month. That's why your rates were low, folks. One of them. Other thing why their rates were low is because the spreads were at all-time lows. SLR, service level premium, sorry, I'm blowing that one, that the banks now are buying more treasuries, they come out and buy more. So remember, the more and more confidence we have in the system, the confidence we have with our leaders, the people that bring it out there, they're not political, they're not old and grungy, they're not tired, they're looking at old data and all this crap. Everybody's tired of it. People that did not agree we need rate cuts 6 months ago, 8 months ago are saying we need rate cuts, we need more. We need rates to get lower. And I'm not saying this because we're in real estate, it's because the small business, the consumer, the mom and pop, the person that's trying to make it, whether they're buying an engagement ring, their food on their credit card or anything like that, lower rates helps everybody. As you know, I'm not saying to put the rates at 2-3%. I'm just saying if we get these interest rates down a full point, it will change the real estate market. It can change the consumer market. It can change for the small businesses. It can help everything out. And look, if we're going to be stuck here at a 2% inflation or 3% inflation, that's where we live and the real number is, and we can live here and we're okay with it. I think instead of just trying to choke the economy like Powell is like with these rates, hit the gas, grow the economy, and let's go, baby. Yeah. Because sitting here and waiting and hoping for inflation to come down and use every gun and every trick in your book, it's not working. Why don't we focus on growth rather than political nonsense BS? Because none of us like it. So anyways, guys, I appreciate you watching. We will find out soon enough if Kevin's here, but stay tuned. Also, if you're not following me on Instagram, please do. It's Kenny B. Simpson, at Kenny B. Simpson. If I can help you guys, you got my digits, you got my number, you know how to reach me. I'm all over the place. Again, thanks for watching. And by the way, happy holidays. Hope you had a good Thanksgiving. Welcome back. We got another month of grinding and we go into our little holiday mode. You're ready for 2026. What's your goals? What are you guys doing? Can I help? Let me know. Talk to you guys soon. Have a great day.